Will it be different this time? Bitcoin's eyes fell to $35,000, and the price of Bitcoin was marked with a death cross. Bitcoin formed a trading pattern on January 8 that is widely watched by traditional chartists for its ability to anticipate further losses. In detail, the cryptocurrency's 50-day exponential moving average fell below its 200-day exponential moving average, forming a so-called death cross. The pattern appeared as Bitcoin underwent a rough ride in the previous 2 months, falling over 40% from its record high of $69,000. Previous death crosses were insignificant to Bitcoin over the past 2 years. For instance, a 50 to 200-day EMA bearish crossover in March 2020 appeared after the BTC price had fallen from nearly $9,000 to below $4,000, turning out to be lagging than predicted. Additionally, its occurrence did little in preventing Bitcoin from rising to around $29,000 by the end of 2020, as shown in the chart below. Similarly, a death cross appeared on the Bitcoin daily charts in July 2021 that, like in March 2020, was more lagging and less predictive. Its occurrence did not lead to a massive sell-off. Instead, BTC's price merely consolidated sideways before rallying to $69,000 by November 2021. But the bearish moving average crossovers in both the instances, as mentioned above, accompanied a piece of good news which may have limited their impact on the Bitcoin market. For instance, the Bitcoin price recovery in July 2021 came majorly in the wake of rumors that Amazon would start accepting cryptocurrencies for payments, that later turned out to be false, and following a conference, dubbed the B word, which saw Twitter CEO Jack Dorsey, Tesla CEO Elon Musk and ARK Invest CEO Cathie Wood speaking highly in favor of Bitcoin. Similarly, Bitcoin recovered sharply from its below $4,000 levels in March 2020, primarily after the United States Federal Reserve announced its loose monetary policies to contain the aftermath of the coronavirus pandemic-led stock market crash. Bitcoin's latest decline reflected growing investor concern about the Fed's decision to aggressively unwind its loose monetary policies, including the dialing back of its $120 billion a month asset purchasing program, followed by 3 rate hikes in 2022. Typically, rising interest rates make holding volatile assets like Bitcoin less appealing than government bonds, which offer guaranteed yield. This is proof that Bitcoin acts like a risk asset, Noel Atchison, head of market insights at crypto lender Genesis Global Trading, told the Wall Street Journal, adding that the short-term holders would be the closest to the exit. Related, Bitcoin may pass $30,000 September lows, trader warned. As a result, the overall reduction in cash liquidity, coupled with the death cross formation, could trigger further sell-offs in the Bitcoin market. However, that is unless the BTC price rebounds from its current support level around $40,000, the 0.382 fib line shown in the chart below. Nonetheless, a break below $40,000 may risk sending the Bitcoin price to the next fib line support near $35,000.